Good afternoon and welcome to the end of day review for today. And today is Tuesday, September 24th, 2024. So we are in the second trading day of this week. We have the low to high, medium impact new, which is the GDP data come out 8:30, and then we have a PCA data. BC data is like right here is a subset of inflation data, and we are in week 39, and we are in the last trading week of September, and September is also the last month of the third quarter. So we want to see how it's gonna close out this quarter, and it's gonna set direction for the last quarter of the year 2024. All right, so that is the economic events that we're waiting right here. So this is the event that we're talking about. Is GDP data come out on Thursday 26, and then the BCA data come out 27. So 26, 27 right here this week, and it's last week of September. All right, now let's look at the charts right here. So what do we see right here? So we mark the PM of the the Friday PM range, and then we have the London range. You see they are kind of they not overlap. Used to be, if you have two scenarios right here. So the PM, the London is between the PM range that you're gonna see is with both ends. But even though today is the London above the PM, private PM, and then it's retraced to get
The markets are closed.
all right, markets go to get the PM low. You see that, or the buy side sell side agree, and then boom, it reversed. So the setup right here, basically we can treat this at a Judah swing at 9:30. Or just before 9:30. It start at 9:15, and you see that it swing and it get the liquidity. In this case, is the buy side liquidity of the previous day. Basically, take out the low of previous day BM range right there. And if we look at the ICT setup, so here's the ICT setup for line. We see that the model one, right, the very first model. So basically this one is regular look for previous day at preference, mark the high, the low exactly right there. Take the V1 sign anticipate. That is the model, ICT model right there. So this is the ICT model one. Let's check the screenshot. Yeah, we do have the screenshot of this. We do a very good write up right there. Actually, is a real breakout. Now this setup is for the Judah swing. So you have Judah swing. So basically we have the fellow gap right here, fellow gap down. You have a refill and reverse. So this is a real breakout at that level. It's a real breakout. And then we have a full breakout right here. That's the setup that we're talking about, and that is the also the ICT model one Judah swing at 9:30. It did not happen exactly at 9:30, but it start at 9:15 right there. So yeah, let's you see put note right there is the privatization rated right there, and it touched the high time frame high time frame high time frame level, which is, in this case is the daily level. We said D1, it means take for daily at this level right here, 57.75, 55.75. Yeah, let edit the note right here real quick. So yeah, we put the note in here. It's also the ICT model 1, which is a Udar swing at 9:30. In this case, it start at 09:15. See that? Yeah, we didn't recognize this morning, but now look back, we see that. Yeah, let's make it even. Alright, it looked good. Save it. Yeah, that's the setup. And it's appropriate out at the level at the 61 or 63, either of them. So put right there. So we have the type 1 reversal, break, test from below, and then reverse right there. It's a type 1 reversal. See that? It's the type 1 reversal. Alright, let's review what is type 1 reversal. Alright, here's the idea of trade reversal. Basically, we had first step is the break key level. In this side is you see the low level right there. That's the break, and then it tests from below, then it's gonna reverse. So that is type 1 reversal for a long setup right there. The short setup is just the reverse, the opposite happen. So in this case, it's a long setup, so it break and it tests from below. You see this level, the 55.61, and then 55.63 right there. Either level, you can see that it's break those two level and test from below. So we would buy stop in here or sell stop in there. We have a nice run right there. It's the huge run. It go all the way up here, but we just get out early. We did took the trade, get out early. We get out early. That is the beautiful setup for today. Right, and we did see this phenomenon whenever we see that it it confluent with the ICT setup. Yeah, so it's it's a 4 breakout reverse with type 1. It confluent with the ICT, the clearly run model right there. Basically, it rate basically it rate the Friday, PM right there. There's a question right here for us. Why it doesn't rate well perfectly? You wanted to rate the London also, but in this case, the London is way above the Friday, so You wanna see that, and also you see the fellow gap right here. It come up to that fellow gap, and boom, it can create another huge gap right here. So right here we kind of reluctant to go short right here, but the minutes after it happened, the minute after happened, we said, wow, we missed right there, but it's still okay. We still learn this setup, right? Our setup is just right here, okay? And we should need to stick into this one setup that we trade. If we see the setup confluent with ICT, then go in and check it. If you don't see it, we don't see this setup, then don't trade. That's the huge lesson for for us every day, especially for today. We see the setup, we pull the trigger, but later on we kind of make mistakes. So basically we give up all our gain, and then we blow up our account again. I mean, this, even though it's the practice account, but we try not to minimize the errors we make. But it's the huge lesson for us to learn. It's okay, because we want to flush out all our so-called bad habit, the shadow part of us that really controls. We have to flush it out with the practice account. So when we get our real account back, which is next month, then we could become a better trader, and we manage our emotion better. We have to be disciplined. We cannot just pull the trigger every time. We have to wait for the time, and when we get the profits, don't give it back. Don't overtrade. And today we did overtrade. We make giant mistake. That means we learn a huge lesson. We will show the recording so we can learn together. But right here we have two beautiful setup. The first is right here, but before that I set up right there. But this new choice, so we haven't. You see the next leg down. So the idea that it's gonna break out at this level or not, because you see that it's break out at level, and now it touched that level again. So the question for us is that, is this gonna be a full breakout at this level or gonna be break out? So the market show us in this case is a real breakout, which is equal a next leg down. Why? Because that huge fellow gap, and it's just refill the gap and then reverse right before the open. So it create a Judah swing. All right. So yeah, we need to add right here. All right. So that is the Judah swing. Set up. We need to. Okay, so we done with this. Let's go with this one. So we need to add a little bit note right here. Basically, this setup is with the ICT model. Model 1 right there, which is Judah swing that it gonna Judah swing, okay, which is brighter day BM sell side liquidity right there. So it's confluent with this model. That's beautiful right there. Yes. So whenever next time we see this setup, we're gonna pull the trigger, because we learned it now. In terms of liquidity run, it's very clear. You see that there is a efficiency right here. So basically, based on the ICT concept, that the liquidity run to so-called external liquidity range or internal liquidity range. In this case, internal liquidity range is the fair value gap. it run up to that, it refill that gap, and then it reverse. The same right here, huge gap, we fill the gap, right? Huge gap, we fill the gap, and then reverse. And it happened twice in a row. First, boom, and also right here we see this this so-called retracement. It's two leg up right there. It's so obvious right here first, because we tried looking for a 4 breakout at the level. We don't see any real let's get break and test from above. We don't see that. But if we know the concept, the model, the ICT and the Quilterun, the relationship or the correlation between the London range and the Friday PM range, then give us a good idea how to execute this trade right there. Oh, okay, let's save this. So early today we reluctant to trade the trade right here because we don't see a reversal type 1 or type 2. It's not clear to us, so we hesitant to short right here at 9:30. But now in the hand size, we can see, because you see that right here, you see that failure gap right there. It refilled that gap and basically gap down and refill and then reverse. And then they have another gap right here, the huge gap right here at this level or this level. So basically this is just gap down, refill and reverse right there. Now we have this model, so we can trade accordingly from now on. And another thing that we see that because it have a failure gap, so it does not need to rate this buy-side liquidity or this buy-side liquidity. Then we aim for the targets, which is a previous day BM range right here. Right, look at the last time we have a similar model that this is in August. So you see that in this case you do have a failure gap right here, but it's not as big like today. Today you see the huge gap right there, and also you see the range in the London. It's huge range, but in the PM you see the AM and the PM for Friday, it kind of overlap. So the target gonna hit the buy side. But for this, when the Euro swing 9:30, right? This is US 9:30, and then it reverse after it sweep the buy side liquidity right here. But the target, it will not be the low of the PM, because the previous day is really a trend day. It's very strong, so it's not gonna rate the PM. The target gonna be the mid range of the PM. But for today, it's different, because the previous day is not really a up strong rally at all, so it can go all the way to the buy side of the BM right there. So that's the two different scenario we see for this kind of setup. But anyway, let's review the trade that we took for today. Alright, here's the first trade we try to take today. So basically at that moment we see the break and test from below, so that's that unit level. That's the reason why we go in right here. So we go long. At that moment, we're thinking in our head, okay, where don't we go in and take a quick profit right here? Because this one may go back against us. And let's see. Yeah, exactly. See that? It stopped it out. So that's our first instant we should follow anyway. But that's the magic happen. And you see, as soon as the candle at 10:30 right, this sell side really, if you see that, boom, boom, you see that, one more time, boom, one more time, pull back right away, you see that. That is a signal tell us get ready, next candle gonna long, you see that, next candle gonna go long real quick right there. Yeah, we should put the buy stop at this level right away. Look at the charts right there. So basically we see the level right there, which is 57.61. Yeah, if we rewind the tape right here, we see that. You see that? That's the perfect setup. When you see the buy side liquidity will rate right here, that is perfect. And now you see that. Hold on. Yeah. Okay, so perfect right here. You see the type 1 reversal right there at this level. It's 75. We fix that level, but it break test from below and reverse. That is the setup. We take screenshot right there. So it's break test from below and reverse right there. That's our break inverter setup right there. We should take only this setup and good with that, call it for the day. And look, we go in just a little bit late right there. We should go right there, but it's okay. And then we see that we see the opportunity because the momentum very huge right there. That's the beauty of the reversal right there, especially for the type 1. It happened very fast, explosive. That's where we can take advantage and add more side. But the tricky when we add more side, we get out of trade early. That's the trick right there. So if next time we're gonna try to less one run, less one side, let the winner run. We took out 3 contract right at that moment. We have 4. We can took out 3 and last one run, because this is it's gonna go up. Eventually it's gonna go up. Like for today, it's gonna go up back to the London high right there. It will. You see right here, it hit a huge deep pullback, but then it's eventually it's go up. It's almost right there. So we got out a lot early. So that's a lesson for us right there. So we got out around this level. If we let it run, we get another 4R right there. So we should let one winner run right there. So that's the lesson learned for right there. So either way, right, if we wrong, we still make money because we already take 3 contract off right there. The last contract we can put to break even. So we have a win-win scenario right there. So that is one of the experiment that we're gonna do next time right there. All right, so that is the beautiful setup which and after this trade we take a break and we're thinking call for the day. But then we make mistake. We come back and the same old story. We trade in the very low probability setup, and we give them all back, and we blow up our account. In this case, Praxis account. So we want to try to blow up as many times as we can, so we can expose the shadow of ourselves, so we can improve better. That is the idea. Okay, so we can see the mistake. Alright, so after we win that, right, it's good for today. But right here we get a little bit greedy right here, so we should call it a day, because now we learn that right after this two huge move, down move and then up move, it will not reverse. So that's an idea. It will not reverse. So right here we a little bit naive. We novice, right? We thought that it gonna be reverse right here and make a second leg up, because we saw that this leg is too strong, but we make mistake that this leg is a reverse of this leg. It's not a out of consolidation. That is the huge difference right there. If this leg up is out of consolidation, then okay, then you can aim for the next leg up. But if this leg is just a reversal of the leg down, then likely it's gonna stay there. That's the huge lesson we learned for today. Alright, and let's see what mistake we make right here. Okay, so basically we try to engage. We should, close everything out and good for today, because we take a very beautiful trade right here, and we're supposed to let the winner run. But anyway, so let's see what mistake. Okay, right here. Okay, so the idea that we say, oh, it's a short, right? Because go into this fellow gap and it's gonna make going down. But that's the mistake we make, because the moment we engage right here, we give back, then what happened in our body is that, or in our mind, that was, oh, we need to get back. We're supposed to win this, and now we give back, so we have to trade to get back what we already give back. So that's the psychological issue right there, and we're glad that we make this mistake on our Praxis account, so we can learn from that. See that? All right, we move right there, but that's it. Is I think we should check profit right here at 180 100. But anyway, we move to break even. It should be good. 5, you try out, right? Break even. All right, it doesn't hurt anything. Good. Then should be done for today. But for some reason we do again. We're here, and we go long. All right, we go long because we look on the 4-hour time frame. We thought that, wow, it's gonna make a second leg up right here, right? Big leg up right here. It make a second leg up because we look on 4-hour time frame, which is right here. We see that. We see the reverse right here, so we anticipate this gonna be leg up. Exactly happened at that moment. This candle is just right here, but now at the end, when it closed at the 16 hour, it raised the buy side. That's what we anticipate at that moment. And it did happen, but the issue is when it not happen right there. Look at that. Let's see. So around 13, 16, and we thought that it's gonna make a big move around there. 13 right here, right? We thought that, all right, so right here. So you gotta make a second leg up and take the buy side. That's what we anticipate right there. But we make the huge mistake. Look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So almost 2 hours it's stuck around here, and only the last minute candle is boom right there. So you never know. You know, even though we anticipate the direction right, but the market not gonna move right away. So we waste a lot right here, back and forth, back and forth. And we waste a lot of our bullet around here, and we give them all back right there. So we learn a huge lesson today. We should call it the day right here, because after this two move, it's not gonna make a big move right away. You see the consolidation right here. Let's watch this so we can learn. Yeah, we have to struggle, because struggle and failure, blunder we have a better. Otherwise, we're not gonna get better if we don't struggle, if we don't make mistake, learn from mistake. You see, we take a huge mistake. All right, you see that? That's after we go break even. All right, we should not trade this setup. We don't look at this. You don't see any setup right here. The only we anticipate that it's gonna make another leg up to rate this buy side. That's the only thing we have in our mind. Right here, you don't see any real breakout right here, right? But we fall ourselves, and then you see, boom, we make another loss trade right there, and now we kind of get a little bit unhinged right here, and we try to get back, right? That's how psychological, issue that we need to overcome that. Okay, so we see flips, so we short them, and look, it topped out right away, and now we go long, and it doesn't last long. Boom, it take out right there, and then we go to short, and look, short, right, and then we what happened right here? Did we short? Yeah, and we don't feel right. I think we close the trade right here. Yeah, I think we close the trade right there. Is that right? So we close right here. Yeah, we want to go. We got right here. Our mind is about the outcome, the money. We say, oh, we're not gonna take a loss for today. So I think we close our trade. Yeah, we try to close our trade. You see that? We hit close because we try to stay green. And now you see that it's a losing battle right there. We no longer look at the setup. We just try to get the money back, or just try to stay green. That is a dangerous territory right there. We get ourselves. You see right there. We just close the trade. Just we want the loss, give back again, and that's fine. Okay, if we can walk away from that's perfect. But we don't. We try to be right. We say, well, no, we cannot be right. Okay, and then, boom. We thought, oh, we're gonna flip. Okay, now we got my second leg up. Perfect. So we go long, and look at that. We get lost again, and we try to short them. Boom. You see, we short them, and we put them to break even right there. We got stop out, and okay, now we go long. Now we go long, and quickly we are descending to. Yeah, you see that? The minute we go long, we got stop out. Boom. You see that from 600 and now we go to -3. And just imagine in our body, all kind of chemicals is just produced, the stress, the embarrassment, the whatever feeling we have in that moment. We feel shocked. We say, why we keep doing that? We embarrass ourselves right there, but it's okay. We learn. Okay, so now here we say, wow, it flips, so we go along. That's fine, and we add 7 contract right there, and at one point we have that much of profit right there. You see that 1,000, but we thought that it's gonna go there because we see the 2,000. We said, wow, that wait for 2,000. But look, it never get there. We should take profit and be done. We go back to 600. We should be done. But anyway, we want to show a lesson. We wanted to see, because at that moment our mind is just, the emotion is too much for it right there. You see, so we decided to take. Okay, so it's break even for the day. Should be good. And it's already 12:14, so we should be good, break even for the day. Okay, it's okay. But then we think, wow, why 600? Why we now have to go back to break even? Let's try to make some money. That is what we're thinking, and that's what get us in trouble. Boom. We try to go along, and boom, we get stopped out. And what we do right here, I think we go along again, and go next to the next clip, to the next recording. Okay, so that's right. We say, wow, it's flipped, so we try to go along. We go very big right there, 5 contract. Come on, make some money. Boom, we got stopped out. You see that? Very hurt right there. Hurt our ego right there. And then it's, oh, all right. So it's done. It should, roll right now. Go up there right there. And we go along. Perfect. Okay, we move our target. Look at how we add more contract. Because at that moment, all we're thinking about is to get back the money we lose. Boom, you see that? Yeah, we should take our profit right there and good for the, instead of go through all of this. But anyway, you see that? It stops us out right away. We lose right there. Boom, now it's go last 1,000. You see, just a little bit dark idea here and there add up. And now we are completely in panic mode right there. Panic mode. Seriously. And now we at bigger side. Try to get money back. Or we look up here. We never look that, the market's, the reaction. We just so caught up with the money. And all right, we short. You see that? The add up. And now right here we try to go along. Look, we had 9 contracts to go along, and look, boom. It didn't go our way. Okay. So right here, I think we take another big loss right here. Boom, you see that? Let's see. Okay, how do we jump to 1 loss right there? Okay, let's see. Yes, so we see we take 2 big loss, and now it's 2,000 loss right there. And now we are in extremely panic mode right there, because it's the end of the day, only 30 minutes. How do we get money back? We risk more, and that's where we dig a big hole. Okay, we short again, but if it go into our way just a little bit right there, but then it's flip. You see that? We cannot afford, so we move the stop loss very tight, and then boom. So we lost not 800 right there, so 2,000 right there. Okay, and now we say, wow, it flips, so we go long. There's not much setup right here. That is the bottom line right there. Right now, there's no setup. I mean, at that moment, we just chase and try to get back the money. You see, now we lost 3,000. And look, now, boom, 4,000. And then, look, we say, oh, now we're going to go long. And boom, we stop out. Right there. We lost, right there. We blow up our account right there. It's a practice account, but it's a good experiment for us right there. We won't get our account, real account back until next month. So we have a little bit of time to keep practice. Try to see how we control our impulsive trading. But the minute we stop out, the last candle is really explosive. You see that? And it take out the buy side. The whole day right here, we try to bet on that's gonna happen, but it did not happen until the last minute. So that's a huge lesson learned for today. So far, here's the pattern for us. We blow our account after around 4 or 5 days. The first couple of days we do very good, but it's just one day. One day we blow the account. So we learn this pattern. We're gonna try to stay longer, and maybe we put a limit, daily limit, maybe 1,000. If we lost 1,000, we done. That's it. So avoid when we go crazy. All right, that's it for today, and thank you for your time and interest. We're always grateful for the opportunities. We do what we love, then success is coming our way. Day by day, every day, we're getting better. And have a good evening, and talk to you tomorrow. Bye for now.